jumping straight into MRR holdings today. Everyone is watching the price action, but the real story is the massive scale of their energy infrastructure and revenue trajectory.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the weeds, just a quick reminder to please subscribe and hit the like button.
Yeah, please do.
It really helps us keep simplifying this wild market for you.
It definitely does.
So it is Monday, February 23, 2026. And I have to be honest, looking at the screens this morning,
Rough morning.
it required a very strong cup of coffee. It is just ugly out there.
Extremely volatile.
Yeah, Bitcoin has been incredibly choppy, dipping below that psychological $68,000 line recently.
Which is a big level.
Right, and I think a lot of it is tied to, those geopolitical tensions we've all been reading about.
Oh, absolutely. The macro environment is tense right now.
And naturally, that creates this sort of gravity. It's dragged the entire crypto stock sector right down with it.
Yeah, it's just a sea of red for a lot of retail traders today.
It is. It feels really heavy.
But this is exactly why we do this kind of analysis. Because when the market is panicking over the spot price of Bitcoin,
they miss the bigger picture.
exactly, they completely miss the structural changes happening inside the actual companies.
Right, and that's precisely why we picked MRA Holdings for today. Because while the market frets over the day-to-day coin prices,
The charts look a little scary.
very scary. But this company has been quietly doing something pretty remarkable in the background.
Transforming, really.
Yeah, they've been transforming from what used to be just a simple miner, plugging in machines and hoping for the best,
Right, the old model.
to becoming a genuine infrastructure giant.
And that's a really important distinction to make early on.
Right.
The label miner almost feels too small for what they are actually attempting to do now.
Absolutely. We are talking about a company that is on track to crack the $1 billion revenue mark in 2025.
$1 billion.
Yeah. Amidst all this noise and red screens, that is a massive signal we need to pay attention to.
It really is. And we have a packed agenda to get through today to really unpack that signal.
Let's lay it out.
First, we need to break down the bull case, specifically this revenue explosion and the moat they are building around their power sources.
The energy moat.
Right. Then, obviously, we have to look at the flip side. We'll handle the bear case, because you simply can't talk about MARA without talking about sympathy trading.
Or the shorts.
Exactly, the massive short interest stacked against them right now.
And we can't forget the calendar either.
No, we have a crucial catalyst coming up this Thursday, February 26th. Listeners absolutely need to be ready for that.
Okay, let's just get right into it. Let's start with the bull case, because the numbers here are frankly staggering if you zoom out just a little bit.
They are.
The narrative arc seems to be shifting from just pure growth to operational dominance.
It's basically the difference between running a quick sprint and running a marathon.
So walk us through the growth trajectory here. I was looking at the historicals earlier, and the ramp up is kind of insane.
It's steep.
In 2023, MARA pulled in about $387 million, which is a decent business.
Solid.
But fast forward to 2024, they hit nearly $656 million.
That's nearly doubling in a very short window.
Right. But here is where it gets highly compelling for the current setup. Analysts are projecting 2025 revenue to hit $1.01 billion.
Over $1 billion.
We are talking about crossing that threshold. That is roughly a 54% year-over-year increase.
$1 billion in revenue for a Bitcoin miner is, well, it's a psychological milestone as much as a financial one.
It definitely puts them in a completely different weight class.
It does. But I have to play the skeptic for just a second here.
Please do.
What is specifically driving that massive number? Because the listener might be sitting there thinking, well, sure, Bitcoin went up, so their revenue went up.
Right, the rising tide lifts all boats argument.
Exactly. Is this just a function of asset price inflation? Or is there something fundamental actually changing in the business mechanics?
That's the big question. And looking at the reports, the answer is that it's not just the coin price going up.
Okay.
It is expanded mining operations and incredible efficiency.
Right.
They aren't just riding the wave here.
They're building a bigger surfboard.
Exactly. They are adding exahash, which is just a fancy industry word for computing power, at a rate that actually outpaces the network's difficulty adjustments.
And that is crucial. Let's explain that. For those who don't follow the technical side of the blockchain, difficulty is the network's way of making it harder to mine Bitcoin as more people join.
It self-regulates.
Right. If you don't upgrade your machines constantly, You actually mine less Bitcoin over time, even running 24/7.
Because your slice of the pie gets smaller.
Exactly. So to
Man.
grow revenue like that, you have to run faster just to stay in the same place, and you have to run sprinting speeds to actually grow your output.
And to prove they are sprinting, we really just have to look at their recent track record. This was sort of the aha moment for me when I was prepping for today.
The earnings report.
Yes, look at the third quarter earnings from 2025.
I remember that report. It got a lot of people off guard
They didn't just beat estimates, they absolutely crushed them.
by a wide margin.
The expectation from the street, the smart money, was earnings per share of 11 cents.
Okay.
MARA delivered 27 cents.
Wow.
That is a 145% beat.
Let's pause on that for a second because that metric, EPS, matters a lot here. When you see a beat of that magnitude in a mining stock, it shows what we call operational leverage.
Break that down for us. What does operational leverage actually look like in a massive server farm?
So in the mining business, you have massive fixed costs. You have to buy the machines, build the server racks, pay for the advanced cooling system.
The infrastructure.
Right. Those costs are there, whether you mine 1 Bitcoin or 1,000 Bitcoins. But once you cover those fixed costs and your baseline electricity bill,
Every extra dollar is profit.
almost purely to the bottom line, a 145% beat means their margins expanded significantly. They made way more money on the exact same physical assets than the Wall Street models predicted.
So it suggests their costs are deeply under control while their output is skyrocketing.
Exactly. It suggests they're running a much tighter ship than anyone gave them credit for.
And that leads us directly to the moat. Because you might look at this and say, okay, that's great, but why IRA?
Right.
Why not CleanSpark? Why not HIVE? There are plenty of publicly traded miners out there. What makes this specific company special?
This is the part of the analysis where we really have to look at the physical world, not just the digital blockchain world.
The actual concrete and wires.
The differentiator here is physical infrastructure.
It comes down to two words: vertical integration.
Right. And in this particular industry, vertical integration is the holy grail.
MRA isn't just renting space in someone else's data center anymore. They own digital energy infrastructure.
But help us understand why that matters. If I'm just buying this stock in my brokerage account, why do I care if they own the power plant or if they just pay an electric bill every month?
Think of it like this. Imagine you run a very successful bakery.
Okay.
If you rent your kitchen and the landlord decides to double the rent next month because he knows you're making money,
You're out of business.
or your margins are crushed, you have zero control. And most smaller miners are essentially renters. They sign hosting agreements.
So if energy prices spike or the host squeezes them, their margins just die.
Exactly. And MRA is becoming the landlord in this analogy.
Precisely. By owning the infrastructure, the transformers, the substations, and having favorable direct power generation contracts, they control their single biggest variable cost.
Electricity.
Electricity is the lifeblood of mining. If you control the power, you control your destiny.
And that naturally lowers their break-even cost.
Significantly lowers it. And that is exactly why this matters right now, specifically this week.
With the price drop.
Right. We are seeing Bitcoin dip below $68,000. For a really inefficient miner who pays high retail rates for electricity, their break-even might be $65,000 a coin.
So they are sweating right now.
They are panicking.
Yeah.
They might actually have to start turning machines off.
Which means they stop earning revenue entirely.
Correct. But if MRI has driven their break-even down to, say, 45 or 50,000, thanks to this vertical integration,
They just keep printing.
they remain highly profitable while the smaller miners struggle to keep the lights on. It protects their market share.
Because the network adjusts.
Yes. When the weak players turn off their machines, the network difficulty drops.
Yeah.
And the strong players, like MRA, suddenly get a bigger slice of the daily pie.
It's defensive and offensive at the exact same time. That's fascinating.
It really is.
It totally changes the view from gambling on crypto to running an industrial utility operation.
It creates a scenario where the strong genuinely get stronger during periods of volatility. While others are unplugging machines to conserve cash, MRA is running at full tilt.
Speaking of cash, we should briefly touch on their financial health before we move to the bear case. I know some people look for dividends in these infrastructure plays. They aren't paying dividends, right?
No, not at all. And Honestly, you wouldn't want them to at this stage in the cycle. This is a pure growth play.
Because the opportunity cost of that capital would be way too high.
Exactly. If they paid a dividend, that's money they aren't using to buy more top-tier, hyper-efficient machines.
Right.
Their free cash flow is being aggressively reinvested into more machines, more hash rate, and that physical energy infrastructure we just talked about.
Building the moat.
They're deploying capital into growth assets to widen it. If you want a dividend yield, go buy a legacy bank stock. You buy MRIA for the aggressive expansion.
So we have explosive revenue growth approaching $1 billion. We have a proven track record of beating earnings estimates handily, and a defensive energy moat that protects them when Bitcoin prices dip.
Sounds pretty good.
Sounds like a slam dunk.
It does sound like one. But
There's always a but.
there's always a but. We have to take off the rose-colored glasses now. Let's break this down further and look at the actual risks.
The bear case.
Right, because if you are holding this stock right now, you know it hasn't been a smooth ride-up. You've got the scars to prove it.
No, it definitely hasn't. It's been an absolute roller coaster. And this brings us right to the bear case. The biggest headache for investors here is the sympathy problem.
Sympathy trading. It's the harsh reality of the entire sector. MRA stock is still spiritually and mathematically tethered to the spot price of Bitcoin,
It is a gravitational pull you simply cannot escape.
no matter how good the business is.
Right. Just look at the recent trading sessions. We saw crypto stocks trading lower across the board.
Why? Not because MRA missed a debt payment.
Not because a transformer blew up.
Exactly. But simply because Bitcoin dipped below $68,000 on those geopolitical headlines.
That's the frustration for fundamental investors, isn't it? You can look at the spreadsheets and say, hey, this company is undervalued based on their revenue trajectory.
But the algorithm doesn't care about your spreadsheet. The trading bots see Bitcoin down, so they instinctively sell Bitcoin miners.
It's a massive correlation risk.
Exactly. Even if the company executes perfectly, even if they hit that billion-dollar revenue target on Thursday, if the coin drops 20%, the stock is going to drop.
And historically, it drops a lot more than the coin does.
That's the high beta concept.
right.
Beta essentially measures volatility relative to the broader market. If Bitcoin falls 5%, a miner stock might fall 10 or 15%.
It acts almost like a leveraged bet on the commodity.
Exactly. It amplifies the moves both to the upside and the downside.
And that volatility brings us to the second major risk, which is also a potential opportunity depending entirely on how strong your stomach is.
The short trap.
Yes. This is a huge factor right now. I was looking at the data, and MERA is currently sitting in the top 10 most shorted stocks list,
It's right up there.
alongside peers like CleanSpark.
Can we pause there for a second?
Yeah, go ahead.
For the listener who hears short interests all the time on financial news, but maybe doesn't know exactly how it impacts the daily price action, what does that actually mean for them on a random Tuesday morning?
Sure. So simply put, short interest measures the percentage of shares that investors have borrowed and sold, betting that the price will go down.
They want the stock to fail.
Right. They want to buy it back cheaper later and pocket the difference. When that number is super high, it means a lot of sophisticated money, we're talking hedge funds, institutional desks, are betting heavily against the stock.
Or hedging their direct Bitcoin exposure.
Exactly. But on the chart, it creates extreme volatility. It means there is a lot of constant downward pressure. Every single time the stock tries to rally on good news, there are people actively trying to push it back down.
But there is a massive flip side to this dynamic, isn't there?
A huge flip side. If Bitcoin stabilizes and the stock actually starts to tick up with some momentum, all those people who bet against it
They're suddenly losing money.
fast. And to stop losing money, they are forced to buy the stock back at market price to close their position.
The famous short squeeze.
You got it. If enough of them panic buy at the exact same time, it causes a massive, violent rally upward.
It's explosive.
But right now, with Bitcoin just chopping around in this lower range, that high short interest is acting like a wet blanket on the share price.
It creates a very nervous, twitchy environment.
It really does. It's also worth noting the sentiment indicators we are seeing across the board. Despite the huge revenue growth we talked about earlier, the news sentiment scores are largely just neutral.
Yeah, because the news cycle is entirely dominated by Bitcoin volatility right now.
Right.
Mainstream financial writers aren't writing articles about MRA's specific efficiency upgrades or their substation acquisitions. They are writing generic articles about crypto crashes or Bitcoin bounces.
And we are seeing options volume dive a bit, too.
That's a tell.
What does that tell you?
That tells me that institutional money is acting very cautious right now. They are sitting on their hands, waiting to see which way the wind blows with the broader macro crypto market.
They aren't placing big directional bets just yet.
Exactly. So we have the bull case of massive growth and energy dominance.
And we have the bear case of correlation risk and short sellers piling on.
It's a total tug of war.
Oh.
So what does this all mean for you, the listener, right now?
This brings us to the crucial segment of today's discussion, what to watch.
This is where the rubber meets the road.
Mark your calendars. Thursday, February 26th, 2026. This is a main event.
We have the fourth quarter and full year 2025 earnings results coming out post-market.
This is the catalyst we've been waiting for. Now, if you were just quickly scanning the headlines on Thursday evening, you might get confused.
Easily.
So let's prepare you for the actual numbers so you don't panic or get faked out by a bad headline.
What acts as the trigger for a major move here? What specifically should we be looking at when the release hits the wire?
Okay, so the consensus expectation for revenue is $250.74 million for the quarter.
Okay.
That would be up about 17% year over year. That's the baseline they need to hit.
That's solid growth for a single quarter.
However, on the earnings per share side, the EPS expectations are remarkably low. The street is actually expecting a loss.
A net loss.
Yes, somewhere between -11 cents and -81 cents per share.
So they are fully expected to lose money on paper for the quarter. That sounds inherently bad.
It sounds bad, but here is the tell. Do not just look at the EPS loss and panic sell your position.
Context matters.
Remember, the third quarter, they beat on mining output. You need to look for a beat on the actual physical production numbers.
Did they mine more Bitcoin than expected?
Exactly.
Right. Because EPS can be heavily skewed by accounting rules, the depreciation schedules of their mining rigs, and crucially, the mark-to-market value of the Bitcoin they hold on their balance sheet.
Which is a lot.
If the Bitcoin price dropped during that specific quarter, they have to take a loss on paper for those assets, even if the core operating business is incredibly healthy.
Exactly. It's an accounting quirk. So look, then this is the headline EPS number. But more importantly, you need to look forward.
100%. The most critical thing on Thursday isn't the backward-looking number from 3 months ago.
No.
It is the 2026 guidance in the shareholder letter.
That is the key to the whole thesis. We need confirmation of that $1 billion revenue run rate we talked about.
If the management team comes out and confidently states, yes, we are on track for over $1 billion in revenue in 2026.
It changes the entire narrative.
Completely. It forces the broader market to look at the structural growth rather than the short-term Bitcoin chop.
It gives institutional investors permission to buy the dip.
And there's a massive macro factor here, too. We have to keep one eye on Bitcoin stabilizing over the next few days.
If Bitcoin holds support right here, if it stops bleeding and holds that 68,000 level, and MRA comes out on Thursday and beats earnings or raises their forward guidance,
That creates the perfect storm.
it really does.
It's the setup for a massive sector rotation. When the broader market feels safe again, money flows out of the safe haven assets and floods back into these high beta miners because they suddenly look incredibly undervalued relative to their growth metrics.
It's basically a powder keg waiting for a match, but the match has to be a rock-solid earnings report.
It's a high-stakes week. There is no doubt about it.
It really is. So let's wrap this up with the lowdown.
Summarize the whole picture for us.
The core thesis is pretty clear. MARA is a high-octane growth story that is currently disguised as a volatile crypto trade.
That's a great way to put it.
The market treats it like a pure proxy for Bitcoin, just another leveraged way to gamble on the coin's price. But the company is actively building an energy moat that is very, very real.
And that revenue target of $1 billion is the North Star. If they hit that, the valuation simply has to catch up eventually. The fundamentals eventually win out over the noise.
Here is a final provocative thought for you to chew on before Thursday's close.
Hit us.
Most people, probably 90% of the retail market, are looking purely at the price of Bitcoin to decide if they like this company or not.
Sure, they pull up the chart.
They check the chart for the coin, they see red, and they completely ignore the stock.
Standard retail behavior.
But with their massive recent investments in physical energy infrastructure, with that aggressive vertical integration we broke down,
Yeah.
the better question might be, is MARA becoming an energy company that just happens to mine Bitcoin?
Wow, that is a fascinating way to frame it.
Right.
Because traditional energy companies trade at entirely different multiples on Wall Street.
Completely different.
They are seen as stable, critical infrastructure, not
Yeah.
speculative tech.
Exactly. If they are truly an energy infrastructure play, utilizing their own captive power to monetize digital assets globally, that is a completely different business model than just a standard crypto miner.
It's a paradigm shift.
And if that's the case, these current share prices might look very, very different in hindsight.
It's a total shift in corporate identity.
Mm-hmm.
And historically, those are usually the most profitable times to invest, right before the broader market realizes the identity has actually changed.
That's the lowdown for today. Thanks for trusting us with your time.
We'll see you in the next one.